Hello, welcome to the end of day review. Not end of day, but end of week review for this week. For a while, we haven't do end of day, so to do end of week for now because our schedule does not allow us, so we have to do end of week for now. So this week we go through, we finish that right. We finish the week 19. Right? We are still in quarter two. We are week 19 right there. And the second trading of May right there. So we are in this week. We just finished week 19. And next week gonna be week 20, and we are still in Q2. So for this week we have a high impact news on Wednesday, which is the FOMC meeting. It's one of the big event of the month, but surprising enough, the FOMC meeting not moving much. Yeah. For this cycle, for this week, that's our observation right there. We don't know why. Maybe because of the fast pause to cut the rate, but somehow the movement in the market is very minimal. Let's go into the chart a little bit. You see right there, so here's the Wednesday on May 7. May 7. Right, that's the Wednesday, May 7 right there. And at 2 p.m. and then at 2:30 right there. Boom. Yep. 2, and then you see right there 2 and 2:30. So it's not moving much at all. Last time the moving is very huge. Let's see. All right, here's the 15 minutes chart we have. Last time they have a FOMC meeting in March 19. Keep in mind that for April they don't have FOMC meeting. Yeah, April they don't have it. You see that they skip April. They have March, and then they go to May. They skip April. But you can see it from the 15 minutes right here. There's a huge move. First you see the move up, and then retracement, and boom. Right, that's the huge move. From 56.82, you can see it's all the way to 57. It's about almost 100 point right there, pip right there. But for this week, or for this cycle, the FOMC meeting moving, oh yeah, it's roughly 80 point right there. Yeah, it's big, but because there's no trend really, it's just consolidated there. But it gives us some idea right there. So whenever you see the Dow like this, take out the low, then get ready for the 230. Yeah, it's 230. It just test that above that and reverse right away. So give us some idea right there. If you see that the 230 and the 2 o'clocks, it kind of overlap right there. And it did take, so the 2 is set up the range right there. Watch for, it broke the range and reversed right away, then it's gonna reverse again. So that's the FOMC for this week. It's very remarkable. Yeah, it's more less than last time, but it still give a good idea. But it's very hard to trace because it's kind of consolidation right there. Last time it's much easier, right? If you have the time right there, you see the retracement, and then boom, you can go long. But in this case, you're not gonna let the trade, the winner run. You have to take quick profits around here. In some sense, it's hard to trace because it's not a one direction. It's back and forth. But if you know exactly what you do, then it gives you more opportunity because back and forth, right? It's not the whole idea right there. Well, now go back to the economic calendar. So that's the whole week for this week is the FOMC meeting. So the FOMC is really the biggest move for this week. But if we compare with other week, it's not really huge at all. So for some reason, the market is very. It makes sense if we look on the daily time frame. We can see that. But anyway, so that is for the economic events, and the option expiration not much for this week. The next FOMC gonna be in June 17, 18. So let's see, June 17. Oh, okay. So it's gonna be 17, 18. So it's gonna be the third week. For this month, this cycle, it's gonna be the second week, but this one will be the third week. Very interesting. That's right. And then for next week, we're also looking for another biggest news, which is the CPI come out on May 13. So May 13 right there for next week. Liquidity inject into the market whenever you have a huge news. So if you see that yep. I mean, right here we can have a case study right here for the FOMC. You see that the 230 set the range right there, and after it set the range, you see that the candle after expansion right here is still within this range. It's not right the low or the sell side. So you give it an idea that the down move have not finished yet. Wait for the second time, which is happened exactly right here. Look at that. As soon as it breaks the high of this candle range, it reverses back right away. That's where you're gonna go in and do what? Do go long right here. You can mark right here. You see that? It tests from above, break and reverse. That's the type 2 reversal. We can see that. Yeah, let do a quick analyze right here. See that? That's the beautiful setup right here. What the high of this candle is 56.20. Alright, 56.20. So you can see that 56.20. Make them both equal, and we can do this. Yes. So you see that? What do you see right there? You see that it tests from above, break and reverse. That is the type 2 reversal, right? Type 2 reversal is pretty much go with the retracement, right? We can call reversal, but reversal in case of retracement. Here the setup that we trade. Here here's our observation. We identify two patterns when it make a reversal. Remember, reversal in here is you have to add a context in this. Reversal can mean that is a reversal, but the reversal can mean a retracement also. Make sure we're on the same page right there. So you have a trend go down, and then it's retracement, and then boom, it makes the next leg down. Then within that retracement, if you see this setup, then you can go in and go for the next leg down or next leg up. So in this case, it's the first leg up right here, and then it's retrace and make the second leg. The reason why, because you see that it broke what? It broke this level. You can see that it broke first, and then it come back. Alright, so in this case we have a reversal right here. Right, reversal in the sense that it reversed at this level. Alright, it's in that level. But if you set in the trend on this first leg up, then this is a retracement. So there are a very subtle different right there. So go back to our basic right here. So we identified two types of full breakout reversal. Type 1 is very common. Type 1 it happened in a reversal of reversal. Type 2 is mainly happen in a retracement. Basically, trade 2 is more like in a continuation. Type 1 is cup reversal right there. Yeah, that's the beautiful observation right there. Let's make a let's make the note of this so we can understand. Alright, let's put the note right here. We have a beautiful note idea for today, and let's see how it's play out. So know that the for breakout reversal type 1 is happen in a reversal. Is a reversal, and for the full breakout reversal type 2 is mainly a continuation. By that we mean that it's a retracement. It happened in a retracement. Yeah, we hope that we put it here. We make it make us easy to understand. All right, so yep. So basically, we will come back, revisit this one, and solidify this. But this is what we are observe. we see this for today. So basically, the markets have, or the price action have two scenarios. One is going to reversal. Okay. The second scenario is continuation. It's gonna go with whatever the last the first move is. So it's gonna continuation. But in all the continuation, it's gonna retrace and then make the next expansion, which is it can be next leg down or next leg up right there. So that's the whole idea. With that in mind, then we can see that the type 1 is happened a lot in the reversal, and type 2 has happened a lot in the continuation, right? Which is next leg down or next leg up right there. Yeah, let's go with that for now. All right, we will save this. And now let's see what we have. So we put the verbiage right there. So reversal type 1 happened on the reversal, and type 2 is happened in the continuation. This not always 100%, right? That's nothing 100%. That's but that go with this, and then we can revisit to remodify our observation. So basically, we see that in here, okay, so we see the pattern right here. So this is our first, what is our first leg up right here, and then this is the retracement. That's the whole idea. And then in the retracement, you're gonna see the type 2, which is, you see that is break the level, right? Yeah, it touch from above, and then it's break and reverse, which is right here, type 2. For a long setup, type 2 right here. Touch from, yes, right here, touch from above, break and reverse. But there are deviation. You see that it's not 3 candle, but actually this this one's supposed to break it, but it did not break it yet. It go to the next candle, then boom, it reversed. So that's the deviation right there. Sometimes we have exactly play out we want, but other time you have to wait for another one more candle. So it's a type 2 reversal right here. See that? It's touch from above, break and reverse. Let's mark it down and take the screenshot again. So right here is FOMC. We drill down, we can see that. So right there you have what? You have right here, this is the test from above, and then you have the break it. You have this one is break, and this one is reverse. So you have 3 steps right there. So you can say the first step is it tests from above right there. TF8 test from above. make it 12. Yeah, so you have test from above, and then the second move you have break it. You have break. Ideally, we want the break is happen right after the test from above, but sometimes it can skip one candle. It's okay as long as it's in a high impact move. Then you can take a trade, and then reverse. So you have 3 steps right there. All right, so you have break, test from above, and reverse. See that? Test from above, break, and reverse. That is the type 2 reversal right here. Test from above, right? Test from above, break. Oh, I think we missed both right here. It should be test from above. Yeah, here we say test from below. This one had to be test from above. Yeah, we need to fix this. Let's fix that right now. All right, we just make a quick fix right there. So test from above right there. Right. Ideally, you want is a down close candle, but in this case, we have is a up close. But right after that, you have a down close right there, and really test above, but it did not reach that level. Yes, so you can see right there. So there's some deviation, but it's still very good high quality setup. So basically you put a buy stop at this level because there's no reason for it to come back to that level. That's the beauty right there. It's a very high quality setup, and you can catch the huge move. Let's see. So if we put a buy stop right here, and let's say buy stop right there, and we reach let's push right there. So 2R, we reach 2R, and then it go all the way up here. Wow, 2R 10 point, but you get about almost 1 to 5 risk to reward ratio right there. So it's a very decent move for us right there. Yep. So you can aim at this after expansion candle right there. Yeah, if you're not sure, then maybe arm of the London high right there. So it's always retraced when it hit the London low, and it sweep the south side of London, and both the prior day BM is retraced. But don't go in long, just wait for this one more retracement and boom, just look for a sell type 1 or type 2. In this case, because the retracements are likely going to happen in type 2 reversal. That's exactly what we mean right here. It's type 2 reversal, which is a retracement. Right there is a retracement. And this is a retracement. That's right, that's retracement right there. If you look further into the lab, you can see it makes more sense because this is the first leg up right there. So all this move is just a retracement, not a reversal. All right, it's not a reversal. Yeah, because this is the first leg up already, so it's just a retracement. Boom, it make a snake leg up right there. So is that right? No, it's right here. Yep. And here's the example when we see the reversal type 1 happen in a reversal scenario. Yeah, you can say reversal or retracement. Here's the weekly. So you see, you mark the level right there. So it's break the level, it tests from below, and then it reverse. Basically, you want to reverse right after the test move, but sometimes it's just one candle late. In this case, it skip this candle and then they cannot break the level. You see that? So that's its type 1 reversal right there. Breaks that from below and then reverse. Go back to our playbook right here. You see the type 1 right here. Breaks, test from below and reverse. That is break that from below and reverse right there. You can call this a reversal in this sense that is reversal, but if you put in a bigger contact, it may not look like a reversal, but it look like a retracement, right? But in this case, more sense to say this is a reversal because you have a first leg and then you have retracement right here. That's a retracement. Yeah, that's a retracement. Because first leg and then retracement and then boom. Neck leg down and it reverse from here. So we can say that is a reversal. And that's the reason why we say that the type 1 likely gonna happen and in a reversal scenario. In the type 2 it's happening in a continuation, which is the retracement where we go with the continuation. Right. In order to trade continuation, we have to go, our entry is around the retracement area, right? You want to go over there. You don't want to go too late or too early. So watch for the retracement to go with the next expansion move. So that's the whole idea right there. So in summary, we can say that for the FOMC meeting this week, week 19, we have a nice up right here. It happened late. Right, that's it. I think it's 15. Right, it's the 15 hour, 15:35. Let's go back to the chart. We see that. So this happened at 15:30. So after the meeting, right, the 2:30 right there, then this happened at 3:30 right there. That's the big move, huge move. That's the FOMC meeting right there. Yep, so that's the two. Let's add the little bit time frame in here so we can understand better. All right, let's do that. So basically we add the time right here. So right here is give us some time frame reference. So when we time is critical, right? Because the price, the market move not only on the price only, but at time, because you have a time to open and time close. So it's restrained by the influence, or is affected by the time. That's what we mean. So this one is at 14, which is 2 p.m. when they release the meeting note, whether they're gonna right there. So you have 2 and watch for the 2:30 when the Fed chair make a statement, and it retrace beautiful right there, and then boom, it make a second leg up, and next day keep moving. But anyway, that is how it's play out in the real time right there. So you have a right here 30 minutes later. Yeah, 30 minutes later you see it's still overlap in this whole range right there. And then it broke out that range the first time, it reversed right away, and then the second time, boom, it break. That's beautiful. Okay, let's take this screenshot again. Keep in mind that we try to go slow, right? Go slow. We have all the time we want. We don't need to rush. This is our lifetime average, so we don't rush, we don't chase. Let it come to us. That's the beauty right there. So basically, you have this right here. That is the test from above. If you can see that, and right here is a step that it break it, right? And right here is the step that it reverse. Okay, so basically, alright, we add it. Try again. So the very first step you want to see is a test from above. Alright, test from above. And then the second step you want to see, second move you want to see is break it. And then you're gonna see that it's reversed back right away. So the level is right here, right? That's the level. It's level set by this candle. So the candle after expansion move very critical. It tells us how the algo gonna reset right there. So it's the FOMC setup. So basically we have FOMC May 7th on Wednesday. Is that right? May 7th? Yeah, is it? No, it's May 7th. Yeah, we think so. Yeah, May 7th. So the setup we have is a 4 breakout reversal type 2. 4 breakout in the sense that, oh, we thought that, alright, it's gonna break this level, but it did not. It flipped back, it reversed. So it's a 4 breakout in that sense right there. It reversed, it not reverse of the reverse, but it's a retracement and boom. Continue the trend. Continue the trend. Like we put the note in here, that's this continuation, which is the next leg up, first leg up and next leg up. So we put the time right here is at 15:30, which is 3:30 p.m. right there. Yes. You can put level right there, but just to go with the time right now. Okay, so that is the key moment for this week. Alright, so we just save this nice right there. Let's compare that with last time we have an FOMC meeting, which is this one right here. So we can see that last time we see giant move, right? This is the first move and this is the retracement. But do we see any? Oh yeah, you can see the setup right there. You see that? That is type 1 right here. In this case, it's retracement, but it's if you look right here, you see this is retracement. So the type 1 can happen in the retracement also. You see the level right there. So it break it, test from below 1, 2, and then reverse right there. 3 times and reverse the 14 right there. That's the type 1 break beautifully right there. So last time we also have we have a type 1, not a type 2. Do you see any type 2 right here? Yeah, we don't see the type 2. So it's hard to tell. Like we say that the type 2 and type 1, sometimes in retracement the type 1 can also happen right there in this case. But like we look on the daily or the weekly right here, we can say that it's the type 1 right here, break, test from below and reverse. Yeah, this is the weekly. In the weekly we see a little bit bullish, but in the monthly we see a little bit bearish. Yeah, for that matter. Okay, let's see what is our profile for this week. Alright, so let's remove this. This is the beautiful, you can see. I mean, some people call this a head and shoulder, right? It's the head right here. You have a shoulder on the left and then you have a second shoulder on the right. And whenever you see the second shoulder pull below, you see in this case perfect alignment right there with this level. Then you put a stop, a buy stop right here. There's no reason for it to come back to that level. The only reason come back in order to reverse or expansion to the upside right there. So it's a very reliable setup. Before we heard head and shoulder, right? It looked like a head shoulder right there, head to shoulder. But now we drill down to the detail. We can see the mechanism behind the scene, how the algo is really operate right there. So basically, this is the first shoulder, second shoulder, and then it's the leg right there, the head right there. And as soon as the second shoulder pull below that, then we know that we're gonna put a buy stop right there. It's a huge move. All right, let's get out of this. And we want to see what we want to see for this week, right? This is the week profile for us right here. Yeah, from Monday to Friday. This is how it manifests itself on a 15 minutes. And then we're going to see, let's take screenshot. Yeah, we need to take screenshot and we just say this is a week 19, Q2 and M5 and 15 minutes right there. So basically the low of the week took place in the midweek right there, exactly at Wednesday. You cannot ask for a better setup right there when it's right on the FOMC meeting. It make the low of the week and then it reverse. And here's how it looked on the daily time frame right here. So basically you see that this is the Monday, this is Tuesday, and then Wednesday take out the low. The low of Wednesday and Tuesday. And also it take out the low of this candle range right there. This candle range set up by the Friday last week or prior week. And it take the sell side and then boom, it go take the buy side, which is take the low first and then take the high. So very interesting to see how next week gonna break out this range one way or another. But the key level is right here set by this candle. We call it the candle after expansion right there. So the whole week you see that level really play out. That level is 5682, right? 5682 right here. That's the 58 right there. You see that the 5282 right there. The whole week is just around that range. How beautiful is that? Start from Monday, go above the level, and then retrace, test from below, and Wednesday go take all the sell side right here. Boom, then it reverse, go to that level and go back again, and boom. So it closed at that level. Can you believe that? That's how beautiful it is. So that's the key level right there. Oh, let's take take a look at some of the trade we took for this week. So here's the trade that we take on Monday. So the market opened at 9:30, so 41, so 6 minutes into the trading, and we saw right here, we saw that there is a flip right there, this candle flip, right? And we see the huge sell side right here and a gap right there. So we thought we're gonna be good setup. Let's see how it's play out. Boom! You see that? That is the beauty right there. Boom! It take out right away. I think we did add more side into that. Yeah, I think we did add into that. Boom! We take a loss. And you see that right there. That is the 930 dozy long leg right there. And it right into the London. Yeah, that's on Monday. Is that right? As on Monday. Go back to the chart. Yes, the Monday right here. You see that? That's the beauty right there. Yeah. See that? Yes, that's the Monday. So whenever we learn the lesson, whenever you see this, don't go. Don't go in and trade. It's very hard to trade because the market is very high resistant liquidity run. That's the ICT term right there. Basically, it's very toppy. Don't engage. Wait for the PM or wait for another 2 hours right there. But wait for PM. Especially it not rate any liquidity. In this case, not rate the London or the brighter day, which is Friday. Right, it is Friday. It did not rate. If you look right here, it makes sense. So it not rate the Friday low at all or the PM. So wait. Yes, wait for it. Okay, if we look on the longer, you can see that it's our Monday. Our Monday, right? Monday is May 5th. So right here, May 5th right there. And you can look right here. That is our Monday right here. And when you see that it's in the London range, all right. Oh, and it did not trade the London. You have to wait. Don't engage. Basically, we put the note in here. Whenever you see this 930 formation like this, it's in the London range, then stay away from it, wait for the PM. It's much better, otherwise it's very hard to trade. That's our note right there. Whenever you see this and it fall on a Monday, then don't trade. Don't trade, especially the prior Friday. There's huge movement. Then don't trade on a Monday AM. That's the whole idea. Wait for the PM and you can have a huge, easy move right here, which is low resistance liquidity run rate. That's the ICC term. Basically, it's very smooth through right here. Instead, you engage in the morning, and you get very toppy, and that's what happened to us right here. Let's see how we trade on a Monday. All right, we saw this. We say, all right, it may be a good setup. Short again, and we go big 11 contract. Let's see how it play out. Boom. That's that's the lesson learned for it right there. Avoid it. It's very toppy. All right, so we look in the daily. Right. By the way, there's some mismatch between TradingView and Thinkorswim. We use Thinkorswim for our charting, but for top step, which is we use TradingView. We take our challenge on that trade. So basically, we work on two different platforms, but it's okay. All right, so we engage again, and boom, it do the second time. So that's the huge lesson. It incredible topic in the morning AM when you see the formation of the 930, a long leg dozy, then stay away, wait for the PM. And right here we chase long. Can you believe that? We chase long. Let's see what lesson we learn. Oh yeah, we chase long or short right here. We short them, I guess. Let's see. Boom. Oh yeah, we short them again. Instead of go long, we go short. Oh, right. So we short them again right here. Oh yeah, we short them again. Yeah, we in the profit. We should have take profit right there. We didn't take profit. You see that? And boom, we paid. Yeah, we didn't take profit when it 5,000. So when it go again, as we get out, and we go long. Wow, boom. Yes, that's the topic that we're talking about. It's very topic. Do not engage. That's the huge lesson. Do not engage in the AM or in the morning on Monday. If the formation of the 930 is right here at the location, the London, right in the range of London. All right, even though it take out the low of the prior day PM, but it's still in the range of London, then forget about this. Just wait for the PM. You don't have to force yourself to take a trade. Just wait. That's the huge lesson we learn. All right, so apparently we didn't learn the lesson. Right? We try again. In this case, we short along. Let's see. All right, so we short them because we feel like, you see that's the setup. Test from below, right? Break and reverse. So that is a type 2. So we engage. Well, let's see how it's play out first. Boom, we engage 15 contract. That's huge. Boom, boom. All right. That's toppy right there. So it flip on us right there. So the idea right here, because we thought it's a good setup, but it's not. Because the 930 already tell us it's very toppy. Normally it looks good, but right here you see the test from below is not really good at all. It had to be really test from below. But look at the setup. You see the test from below, it have to be a long leg on the top and not smooth leg on the bottom. But in this case, we have a, pretty much the long leg for both. So it's not reliable. The market give us the hint right there, the signal right there. We should not engage, but it's okay. We learn. That's how you learn, right? You make mistakes and you learn. Don't afraid to make mistake. The mistakes is where lesson learned. To make mistake. Give yourself room to make mistake and to learn. Boom. That is where we make mistake. And right here we try to short them. The whole idea is all right, we engage right here. Oh, wow. We thought that we got this time because we see that last because right here you see the level right there. Break it test from above, reverse. So we thought they're gonna make the reversal right here. Boom, it go again and again. Let's see. Boom, it just out right there. Yes, so that is all the mistake we make on the PM in the AM. Exactly. So that's a huge lesson learned for us right there. That's a beautiful lesson. You couldn't ask for better lesson. Then you make mistake in the real time and you learn. That's how you learn. The most lesson we learn, the most memorable lesson we learn is when we make mistake. When we are struggle, don't skip the struggle, don't skip the pain, because the pain, the struggle is where you give birth to a new self, a better self of yourself, better version of yourself right there. So they say if you skip the hard, skip the struggle, then you skip the growth. You skip the weight, then you skip the wisdom. So we have to wish to ourselves that we need a healthy dose of pain and suffering. That's where we learn. We have to separate the pain and suffering, embrace it, so we grow. Alright, so that's the Monday, right? Let's go to see if we take any trade on Tuesday. Yeah, for Tuesday, we didn't take any trade on Tuesday. Let's see what the condition on Tuesday. So on Tuesday, yeah, we see a setup right here on Tuesday. We didn't get, we have some other thing to do, but it's beautiful setup. See that? So right here is to reverse a type 2 right there. Oh, so it makes lots of sense when we say that type 2 is play into retracement. You see that? It's the first leg down and this is just a retracement. And that's where you see the type 2 gonna happen the most. But it lay into it again. It's about 3 p.m. 3:45 p.m. Eastern time right there. So basically you have level right there, test from below, break and reverse. You couldn't ask better for this setup on Tuesday. But the good thing, but the not so good thing that on Tuesday we didn't take any trade. We're so busy with other stuff, so we didn't take any trade. But the beautiful setup right here, type 2 reversal. What do we mean by type 2 reversal? Right here, right? Is a short setup, test from below, break and reverse. Exactly, you see that right there. Break, a test from below, break and reverse. And let's see. Yeah, both of them is it upload candle. The test and the break perfectly. The test and the break give that. But also see that the test from below give us a very long wick in the bottom. The same, we're gonna break. That means that all of that is built up sell side already. That give us a very high quality for the short setup at 45 right there, at 1545. Alright, that's a beautiful setup on Tuesday. Now we go into Wednesday, see what we... Yes, Wednesday we take some trade, let's see. Alright, here's the trade we take on Wednesday. So we see that, you see the level right there, right? Break and reverse, you can say that, break and reverse. And it may go down to take the low of this level, candle range right there. That's our anticipate, and we see in the 15 minutes. Okay, so right here we go short because you see the leg right here, the feather gap, and it fill the gap and it have a test from below right there. So we get engaged at 10:30. Is that right? At 10:30. So where is our yeah, this is that 10:30, 10:30, 10:30, 10:30 right here, or 11:30. May 6th. Let's go back there. Is that May 6th? No, May 7th is Wednesday. Got the heel move right here. Wednesday. Alright, so go to Wednesday. Where is our 10:30 right there? Yes, we short right there. Good, good, good. Exactly. You have a setup right here. See that? Break, test from above and reverse. And yeah, let's see right here, we short right there, we go at 10:35. Let's see how it's play out first. And we look into the daily, we see, yeah, it may reverse from there. Right. So we still stay right there. Boom! Yes. Beautiful. You go into our boom. Wow, that's the beautiful trade right there. You see that? We should we aim for just 3R, which is 15 bond right there. But if we get the low of this range, it can hit also. Boom! You see that? It hit the low right there. So basically, we put at 38. It can go to, we get not 8 pip right there. If we put a 30, it still hit it. Yes, that's only trade we take on Wednesday. So the lesson we learned that, trade on Wednesday or Thursday, which is the midweek, give us a lot of good move, right? It's give it a lot of good move. But basically here at 10:45, boom, it take the sell side right there. Yep, the whole rate here. But don't aim for this, yes. That will be the next move here at 40 right there. That happened later on. So if you look at close look on Wednesday, you see that we short right here, we catch the move right there, but there are another trade setup right there. You see that level? So as soon as it rate the sell side, the buy side, the high candle, it reversed by the way. But you can see the setup. Test from below, break and reverse. That is the type 2 right there. The type 2 is gonna be trend continuation right there, right? It's the downtrend, it continuation. So yes, continuation. Then you can see that Yeah, right here is continuation right there. Okay, let's see on Thursday. Do we take any trade on Thursday? We did, and let's see how we see on Thursday. Okay, we go short right here. It's very obvious. Right, we go at 10, we go at 10. Because you see the candle before that, it was 9:45, 9:30, and 9:45 is to have a loss of sell side liquidity right there. So you're gonna read it, this sell side liquidity right there. So that's the sell side liquidity. Then we want to take this opportunity right there. And we look, in the daily, it's likely gonna be up close candle, right? Because you have test from below right at this level right there. You see that right there, breaks, test from below, and reverse. That's type 2. So in the daily, it's gonna be bullish, but at 10 in the 15 minutes, we see the short setup. So we took advantage of that, and boom, we move target at that level because it may revisit that level. So that whole idea, right? It gonna revisit this level, the level that it just break in the pre-markets. You see that? It's all of that in pre-markets. It's gonna revisit that level on the daily time frame. Let's see. But we anticipate, but it did not happen. Can you believe that? Then we take quick profit right away. We don't want to. Yes, so we take it. Instead of take profit at 7,000, we didn't take it because we thought it break. But at the same time, we saw right here it break and we reverse. It made it right away. So we see the movie. We don't want to get back out again. Get back out again. We have, so we take profits. And then right here we short them. Is that right? Yes, we short them. Because we think that it's the first leg and it's a retracement, you can make a second leg down. That's what we believe, and we're gonna take out of the target that we aimed before. And just look how beautiful it go. But boom, it come back, it take us. So we see the mid take right there. Mid take that we put the stop loss too tight. If we leave the stop loss a little bit bigger, we will stay in a trade, and when the minute it kick out, it go into our direction right there. So that is the frustration that as a trader we have to face. We have to deal with it. Boom, you see that hit exactly our targets, man. And then right here we go along because we see, wow, we mark this level. You see that? So it's test from above, break, and reverse. Let's go to the chart at that moment on Thursday. Race is on Thursday. Where our Thursday? Yeah, is that right here? Thursday 8 45. You see that up? 45, and then boom, 11. Right, that's 11. May 8 right there. Is that right? May 8, yes. And the time is right there. Yeah, 11 right there. Wow. Yes, it go into our direction. Boom. Yes, it take beautiful setup. You see right there? Test from above, right? Break and reverse. That is the type 2 right here. See that? Test from above, break and reverse. That's type 2, and it happened right here. In this case, it looked like, yeah, you can see this retracement. It depends how you look, right? Is it the first leg up, retracement, or you can say it's reversal right here also. But it's the beautiful setup. You can see that. Test from above, break and reverse. So we make mistake a trade before here because we put a stop loss too tight, so we get back, but we get this one right because it does make any sense that it come back to the level. The only reason come back level in order to reverse them. So we got a good trade on Thursday right there. we'll learn the hill lesson on Monday. All right, let's see if we check any trade on Friday. Yeah, we did check the trade on Friday. So Friday right there is around 10:36. We see that hill down move. We didn't have a chance to engage at the open at 9:30, so we just look, and I think we take a short trade and we got to stop out because we thought, right? We thought that it's gonna break the level. You see that? Test from up, test from above 2 times and break it. That's which why we go in and we just sell them. But it flip on us. It's okay. And right here we go long. Because the reason right there, you see that right here you see that it's break, test from below and reverse, and we go with big right there because we know that Friday not gonna move much, so it stay for a while and then we just take a quick profit and get out. Yeah, that's the quick trade we take. Anyway, we run out of time, and that's pretty much for this week. So the weekly profile for this week is basically that the Wednesday is make a low and then it reverse. It take out the candle range right here on last Friday right there. All right, thank you for your time and interest. We always appreciate the opportunity. Grateful for these opportunities, and we do what we love, or we find what we love. We find the love in what we're doing, then success is coming our way, even though it seems like we struggle or whatever, we make mistakes, whatever, but that's part of the process right there. Embrace it, love it, enjoy it, then here you go. You will be you will reach a better version of yourself, and you go from there. Have a great weekend and see you next week.